Good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. This is the show where we put you in front of where the action is in the broader markets. So certainly a lot going on. Last Friday's dynamics in the markets shifted things a bit. So let's go ahead and take a look at what we will be reviewing today. Of course, as usual, we are going to go ahead and take a look at where the markets are currently, and we can certainly review where the broader markets stand now, take a look at some critical areas that are going to need to be met as far as whether the current uptrend remains in place or not. And then from there, we're going to go ahead and take a look at stockcharts.com market movers table and how you can utilize that to spot potential candidates. We're in a period right now where we're seeing a bit more in the way of volatility. So this would be geared more toward shorter term investing as far as identifying potential intraday plans, but also using it to spot potential trends. And then from there are a few stocks, probably about 40 that are due to report this week, but a couple of them that are worth noting. We'll take a look at those particular stocks. And then defensive areas that also offer a bit in the way of growth. We're in a bit of a shaky period in the broader market, so you will want to be able to uncover stocks that have a more defensive feel to them, but also that are in a period or have prospects of growing. And lastly, we're going to take a review of large cap FAANG stocks. These stocks over the last 2 weeks have picked up as far as in popularity, as far as accumulation and money flows. So we'll take a few minutes and review each of these FAANG stocks so that you can potentially get a feel, because of course these stocks have a big heavy weight on the broader markets, and as these stocks go, so too can the broader market. So I think it's critical that you remain on top of how these FAANG stocks are performing. So let's go ahead and get started. This is a daily price chart. It's a little bit marked up more than usual, but this is the S&P 500. So we're looking at a daily price chart. Each one of these bars is 1 day of price activity. And true to form, I've overlaid simple moving averages right on top of the price performance here. So we can see that there is a green line, that's your 10-day simple moving average. The red is your 50-day, and the blue is the 200-day simple moving average. And quite simply, these are smoothed out versions of those time periods. So the 10-day would be the last 10 days of price activity smoothed out. So let's go ahead and take a look at where we are now. I want to make sure I have an updated version here. So because this is as of the close on Friday. So what I did also point out here to you, this drawn line, this vertical or horizontal line here is pointing you out the close, or actually the high in December, which was 2,800. This was always viewed as a pretty critical area, not only as potential upside resistance, but now as potential support. So what we did have on Friday, as the markets closed almost 2%, the index is closed right at that 2,800 level. So we will want to keep an eye on that. If we break, and we're just now breaking a bit below, we closed at exactly 2,800 on Friday. If we break a bit below that, your next possible area of support is going to be this 200-day simple moving average. And we're about 1.5% away from that. So we will want to keep an eye on that. Let's take a look at some of the other indicators that I've overlaid. On the top here, we have what's called an RSI. That's your relative strength indicator. And we want to see this RSI not only trending upward, but trading above this net neutral 50. So we are there, but we can see that the RSI is trending a bit downward. Not exactly what we want to see, but that's where we are currently. And we can use this RSI if we go back historically. I'm taking you back to December, certainly back last fall. We can see these are periods of deterioration, and we can see during that period where the RSI was an indicator that broke down. Once we broke below that net neutral 50, it's not going to be a singular characteristic. We do want to marry that with other indications. So going back here to October, when we broke this RSI below that 50, we also had the index breaking below these key moving averages, which had been acting as support. Once they break below and you can marry it with a deterioration in the RSI, it is not what you want to see. It's not positive. But let's go ahead down below here. We have what's called the MACD. And I am going to go ahead and modify that because for these broader indexes, you are better served to use stochastics. They are a bit more powerful. They are also a momentum indicator. So I'm going to go ahead and put the full stochastics down here on the bottom, and you'll see a difference here. What we are keying in here on with the stochastics is still that net neutral 50. We want the stochastics to remain above, and they are, so we're still in good standing there. But let's go back for reference to these earlier periods here back in October, certainly November and December, and we can see as this RSI breaks below this net neutral 50, stock price breaks, the index breaks below these key moving averages. And when you also have a deteriorating stochastics, all three of these indicators coming in as negative. So currently we can see the RSI is holding above that net neutral 50. So we're certainly, as of today, in good standing. The stochastics are trending downward. They're not even at that 50 quite yet, but these are the keys that we want to pay attention to as far as providing insight into the health or the weakness of the broader markets. Now, one other area I do want to show you is a weekly view, and let's see if we can go ahead and modify again the stochastics down here, and you'll see for reference, because the weekly charts are going to provide you with a bigger picture, certainly a longer term outlook and perspective. So what we can see here, and again, I'm going to reference going back to last year, we can see these prior periods of deterioration, and quite simply, the RSI really stayed quite positive until we got into this October-November period. But what we want to look at here are the stochastics, how it was not until we got into November that the stochastics did break and really give us a feel that the downside momentum was in place. And same with the RSI. It wasn't until this period here, and I'm taking you down to November, when things really did get out of not very healthy. So looking at the weekly, the stochastics are still up here above 80. Again, all with an eye toward this potential break below the 50, likewise with that RSI. So there we are with the broader markets. Let's go ahead and drill down and take a look at some of the sub-industry groupings within the broader markets. We want to see where the strength or potential weakness is. This is what's called the candle glance view. This is accessible from that initial interface page on stockcharts.com, and initially it will be populated by various indexes and ETFs. I've gone ahead and put in various ETFs that are going to reflect the markets by way of industry groups. So we can see the broader markets are here, the Dow, the S&P, the NASDAQ, the Russell. But then from there, I've input the technology sector. We want to keep an eye on the 10-year bond because interest rates have been a critical component here of late. Financials, we have XLP, which is consumer staples, and so on. So by populating that, I am getting a 2-month thumbnail shot of these various indices. And then I've gone ahead and added an indicator, the RSI, relative strength. I want to see where the strength is among these various sectors and industry groupings, and then also sorted that by descending. So now I can very quickly get a good feel for where the markets are and where the strength relative to the weakness is. So what we're looking at here is on the upper left quartile. Quite simply, this is your strongest, in this case, sector, and then it subgroups down to your weakest area, and this is the yield on that 10-year bond. We are seeing continued deterioration, which is not a good sign, certainly not good for the broader markets as the yields drop, as the treasuries go higher. The markets historically will tend to go lower. So we can see that we have utilities up here in the forefront, followed by real estate and then staples. These three sectors are very clearly defensive. They offer a higher yield. Utility stocks on average 3.3% yield. You compare that to the 10-year treasury, which is down here at 2.4. So you are getting not only that higher yield, but also utilities, as a matter of fact, they are a service that is going to be needed regardless of the economy. We are going to need electricity, water, and so forth. So you have that defensive nature coupled with that higher yield. Real estate stocks, it's all about the REITs, real estate investment trust. These are going to be higher yielding stocks. We will dig into these. And then consumer staples, another area that regardless of the economy, we will still need food and other staples that are offered. But then take a look here at technology, and technology had been leading the markets into last Friday's deterioration, and it's still positioned up here in the forefront. And then from there we go to consumer discretionary. Certainly I do a lot of work as far as screening, drilling, looking at where within given sectors the strength is, and a lot of this is because of a nice pop in Amazon stock, which is a big heavyweight among discretionary, and then gold, another area that is viewed certainly as defensive. It's up about 0.5 point today, and so forth. So financials really getting hit. That particular group did get clobbered. So I'm going to go ahead from here, just take a moment and review before we get into reviewing those individual FAANG stocks and looking at defensive areas. We're just going to take a minute here and review. Stockcharts.com is going into their 20th year. There is an anniversary, super exciting. So we're going to take a minute and review some interesting items coming up for that.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
And welcome back. I did mention to you that we're going to take a look at the market movers. For those of you that maybe just see this but don't really pay close attention, I thought I would draw your attention to it. This is on the right side of the stockcharts.com main page. Very simply, what we have here are the top 10 market movers within various indices. So we have the S&P 500. We also can look at the Dow, the NASDAQ, but let's go ahead and stick with the S&P 500, and we still we're a little bit, certainly an hour plus out from the open, but this is the type of indication or screening that you can quickly take a look at, perhaps at the open. For those of you that are more active traders, you are potentially looking for shorter term plays, and we can see quite simply these are the top 10, and it's by percent. Now we can also sort this by most active, and these are stocks that are seeing more in the way of volume. But let's take a look at this percent up, and quite simply we can drill down and take a look. Interestingly, we are seeing a number of stocks today within certainly retail. Lennar, this is a company that is due to report this week. So how about we go ahead and just click on to that stock name. And now we are looking at Lennar. This is a housing stock. And as mentioned, they are due to report on Thursday. And we can take a look here at this daily price chart just to go ahead and get a start. And let me go ahead and make this a little bit larger so that you can see everything that's displayed. So we can see that Lennar is just potentially breaking up above these key simple moving averages. That's going to be a key component to a potential more upside. We can see the RSI is trending upward above this net neutral 50. Down below we have the MACD. It's still up above this net neutral 50 as well. Now, what I am going to go ahead and do, because there is, with the concept, the Federal Reserve did come out last week. They, in their comments, announced for the most part that interest rates, the Federal Reserve will not be raising rates for the remainder of the year. Huge news. With that, there is speculation that housing stocks may pick up here. Certainly they are interest rate, as well as certainly a lot of other factors, but they can be very interest rate sensitive. So what I'm going to do from here is go ahead and pull up an intra-day chart, and this is going to be a 1-hour chart. And so we are looking at each bar here is 1 hour of activity, and the same dynamics are going to occur with these technical indicators, but I've overlaid different simple moving average, a 5 and a 13, because we're looking at an intraday. That's going to be a 5-hour and a 13-hour smoothed out moving average line. So what we want to see for these faster looking charts, because they are going to be more volatile, they're intraday, we want to see that same dynamic where the stock price breaks above these simple moving averages. And then when you can marry that with an RSI that is breaking above that net neutral 50, and then likewise down here, this is the moving average, convergence, divergence, two different items that we want to key in on. One is this black line is your MACD. The red is your signal line. So we want to see the black line, in this case, positively crossing up through the red. That's your positive signal. And then ideally, once it crosses above this net neutral 50, then you're really in good standing. On intra-day charts, this crossover will be an earlier signal that you can in fact pay attention to, but certainly ideally you do want it to break up above this 0. So here we are with Lennar, happen to be in that that market movers in the top 10 for today. And we can see that dynamically we are very much in an uptrend. Now let's go back here and take a look at other examples when we have entered with this 1 hour, 60-minute price chart, entered into potential uptrends. I'm taking you back to the middle of February with this particular chart. And we can see as long as this RSI stays above this net neutral, you can stay with the stock. But more importantly now, I want to key you in on what to pay attention to as far as when it's time to exit. And of course, the dynamics are going to be reversed. The stock's price now breaks below, this is the end of February, breaks below these key simple moving averages in line with an RSI that is breaking below this net neutral 50. And then we also had that early signal here with the black line through the red. This is your moving average convergence divergence. And then it breaks below that net neutral. This is your exit for this particular stock. So hopefully you got a sense of how you can utilize that in market movers. Let's go ahead and move on, because I certainly did want to go ahead and review these FAANG stocks, the FAANG. For those of you not familiar, it's Facebook, Amazon, Apple, Netflix, Google. And what we want to look at, let's take a look and begin with Facebook. This is a stock, we're looking at a daily price chart. And Facebook certainly has struggled here of late. They had these big privacy issues back here in last summer. The stock deteriorated quite a bit, and it really looked on its way to coming back. This is earnings. They are doing, we're doing a great job with targeting, their advertising, a lot of positive dynamics. But more recently, the company has faltered. They've had issues with major executives departing. And so we can see that the stock is languishing and not looking very attractive. I'm going to go ahead and pull up a weekly chart and show you, certainly for the better part of this year, we're not seeing a lot in the way of upward movement. So Facebook is not certainly one of the better among these bigger FAANG stocks. But let's go ahead and take a look at Apple. And we can see that Apple really has moved significantly more recently, over the last 2 weeks, certainly even beyond that. And this again is a gap up on earnings. So we can see that that Apple certainly fell out of bed. There was a lot going on as far as the management coming forward, guiding lower going into this year and even next with their iPhone and other products. Demand was dropping, so the stock dropped, and then also in line with the broader markets. But more recently, Apple certainly has picked up. They are coming out today with an announcement at about 1 p.m. Eastern time. It's a long-awaited announcement that's relating to video subscription services. Now, there are a lot of analysts that think the news has been already built into today's announcement. The stock's holding in fairly well, but what we want to look at here is the stock's price advance above this 200-day simple moving average, which certainly had been acting as resistance. The stock bullishly did break above that. So if we see market pressures lift, the stock certainly is in a position to advance further, but we will see how how the markets respond to their announcement today. But let's go ahead and take a look at Google, or actually Alphabet, pardon me, being old school with the name of the company, but it is Alphabet. And what I wanted to point out with this particular stock, they did unveil a cloud-based gaming platform, Stadia, where hardware will not be needed. Individuals can do gaming directly from their computers. And so we can see that this stock is potentially poised to break out of this longer term base. So I'm going to go ahead and pull up a weekly price chart so you can get a better feel for that. What I'm taking you back to here is the high-end price back last August in Google, and the stock sold off, certainly with the broader markets. Here we're seeing a recovery and a formation of the right side of the base. So if this stock were to get back up to this 1300 level, and break above that, certainly we would have a lot more in the way of upside. But this stock of the FAANG is certainly the most bullish, I would say, looking as far as the potential upside of this particular stock. Price targets have it well above 1,300. Certainly worth taking a look at. Let's take a look at Netflix, because I do want to have time to get into some of these defensive areas. But Netflix really is marking time. And we can see this is a weekly price chart. It's been in a bit of a go nowhere environment. And with Netflix, it's all about increasing their subscriber base. And there are certainly those that think that that area of growth is slipping, but they also are very much in debt. They are very well known for their products as far as their services being very unique, but they are losing a lot, and they did increase pricing lately. But if we look at the stock, it's not very dynamic. We can see this is a daily price chart. The RSI is up here above this net neutral zero. The MACD is trending downward, and this is what happens when a stock really just marks time. The MACD will tend to gravitate toward this net neutral zero, but right now, this particular stock is not overly dynamic looking. We can go back to last April. This is certainly more of what you would want to see. You would want to see the stock trending upward, finding support at an upward trending 10-day simple moving average. And we're really not seeing that. Netflix looks a bit stuck, if you will. So that is, and then one last one that we will go ahead and take a look at is Amazon. And I mentioned that that particular stock has picked up a bit here in the last couple of weeks. This is similar to Apple. The stock has broken up above this blue 200-day simple moving average. A break up above that can be very bullish, particularly if we can sustain that. But again, this back here, back last May into October, is more of a look that would tell you that the stock is in a confirmed uptrend. And we are starting to see that. This 10-day is starting to trend upward. This break of the 10-day green simple moving average up above the blue 200-day is what's called a golden cross. So again, if market pressures are lifted and we can see a continuation of this upward trending 10-day with Amazon continuing to trend upward, that certainly would be quite a bit more in the way of bullish. So let's go ahead quickly to stockcharts.com initial phase page and drill down into some of these more defensive areas. So I'm taking you to sector summary, and it's giving us today's performance up here in the forefront. Let's go ahead and take a look at the 1 week view. Here we are. I talked about those defensive areas being up here in the forefront. Real estate, investment, trust, these are the stocks that are going to be higher yielding. So once what I've done is gone into that real estate sector, it then provides you with these sub-industry groupings by performance. We can click onto the name, and then ideally what you want to do is sort it by scooter. This is the stock charts technical rating. These are your better performers, and very soundly. Let's take a look at Care Trust. This is a company I'm quite familiar with. It's on the MEM Edge suggested holdings list, and it's been really quite a big winner. We can see the stock. I talk about the stocks being in uptrends. We had this nice crossover back at the beginning of the year on that MACD, and the stock's continuing to find support at an upward trending 10-day simple moving average. They provide housing for senior as well as health related. And let's go ahead back, because I did want to drill down and take a quick look at utilities. This has, you noted when we started the show that utility stocks were showing up really quite constructively. We can look certainly at water, multi-utilities. These guys use solar, alternative energy, again, sorting it by scooter. And we can see WEC, for an example, is certainly one of the better performers. Super, super powerful uptrend for this particular stock. I will have to leave it at that. For those of you trading actively, happy trading.